And we are now awaiting the last numbers of the year. Initial jobless claims, 787,000. 787,000. This is definitely a nice drop. Last week, of course, it was 803,000. It probably will get revised in a few minutes, so let's move on. Continuing claims expected to be around 5.3 million, came in lighter as well. 5,219,000 sequentially, at least so far, following 5.337 million. Let's go through some extremes so we can let you, the viewer and the listener, get where we are. 787 on initial. How does that compare? Well, the lowest read we had was 711,000. That was the first week in November. The worst read was the last week in March, and that was 6,867,000. On continuing claims, the biggest number was 24.9 million, and that was many weeks after the peak in initial. That was the first week in May, and the smallest level was 5,337,000 until now, because this week is the lowest read for continuing claims at 5,219,000. Revisions did come in. They're subtle. They don't really make a huge difference. Interest rates are hovering, well, at about a one-week low on a closing basis at 166 for 30s. But I think the real issue continues to be that the all-time low yield in 10-year notes is 0.5%. So we are almost double that. That cushion is actually a good thing. I personally think the worst thing for the country would be get any closer to zero on some of these rates. Becky, back to you.
Hey, Rick, stay with us. I want to ask you more about the dollar in just a little bit, too. But Steve Leisman is here, and we want to get his reaction to these numbers, too. Steve, what do you think?
Definite improvement, but again, the level remains scarily high, I guess is the best way to say it. The 787, again, each one of these weeks we've had is above the worst week we ever had in the financial crisis. It's down from the pop we had. I think what looks like happened, and this is using other high-frequency data that I've been following, is we had a real slowing of the economy in early December, probably going through mid-December. And I was reading a Goldman Sachs report this morning. It looks like some activity may have picked up towards the end of the month, and this might be reflecting that. But you could also have a lot of confusion in here. Remember, Becky, we had this on-again, off-again renewal of the jobless claims. You could imagine some might have waited to figure out what was the story before applying. You also have some seasonal issues around there being holidays in here. Ultimately, all of this improvement that we have is going to be too late to really bear on the reference week, which was December 15th, and that showed a pop. And so that's why I'm reading a bunch of forecasters right now, Becky, who are suggesting that we're going to have flat or negative growth for December. I'll dive into more of that on Monday. Everybody take the weekend off, and we can think about this on Monday. But next week is the jobs report, and we'll be focused on what that says more broadly about the labor market in the United States.
Shepard Smith here. Thanks for watching CNBC on YouTube.